Well, let's delve into what drove the local market here on the day. Andrew Dittberner, a senior investment manager at Cannon Asset Managers, joining us. Andrew, thanks so much for your time today.
Thanks.
So I was talking about the overall market. I mean, sitting at a new record high, and every second day it seems to happen. And you have headlines saying kind of the phantom drivers of the JSE. Everyone's saying what's really driving the JSE. But if you look at it, it's stocks like British American Tobacco, SAB Miller, companies we know earn a lot of their earnings offshore. So does that make sense to you?
Yeah, I think it does. I think we've seen this over the last year. These large cap industrial companies with earning streams from abroad they've been pushed up to multiples in excess of 20 times. So those are looking quite expensive, and they are driving the market. Your Richmonds, for example, as well. Going forward, I think the market as a whole looks fairly valued, specifically if you look through the cycle. On a through the cycle PE of about 16 times, I think is fair. So going forward, what needs to drive the market now is earnings. You're not going to see a re-rating. We don't expect to see a re-rating. Rather, we expect to see some decent earnings, I'd say, in the region of between 10 and 15% for the year ahead, should hopefully drive the market.
Overall, on average.
That's it.
And of course, the JSE is sitting at around 14.8 times at this point in time. PPC coming out with their trading update in the afternoon today, and basically saying they're looking at a year-on-year improvement in 2013, but still limited visibility. So how do you take that kind of commentary when they're not quite sure how it's going to pan out, but they're saying it is going to be better?
Yeah, it's a bit ambiguous, I think. It was nice to see some volume growth coming through from Botswana, Zimbabwe, South Africa. I think the concern with PPC from our side is they seem quite keen to do acquisitions in Africa, and that comes with a number of problems. Obviously, it's expensive. It will hurt margins going forward, and also you don't want to rush into acquisitions. You could overpay for acquisitions. You could make poor acquisitions. So from our side, that would be.
It seems like they've been flagging African acquisitions for some time and saying they're not talking about it, but they are looking. So it looks like they have been quite cautious.
Yeah, and I think, again, I think that comes back to the local market. Obviously, the view on the local market is it's very competitive. You've obviously got the cost pressures that you got in the mining sector as well, electricity costs, labour costs. So I think this South African sector is a difficult sector to be in at the moment, and hence looking into Africa.
Now, Group 5 also interim headline earnings per share expected to be between 10 and 20% higher. Would you buy Group 5 on the back of this trading update?
We've liked Group 5 for some time. We've held it for a number of years. The construction sector as a whole has been through a very tough time. They're coming off quite a low base. You would expect to see some decent earnings, or at least some earnings growth rather, coming through, and that's what we've seen here.
What are the main reasons why you like Group 5 relative to other construction stocks?
I think purely a valuation argument. I think Wilson Bailey Homes is known as the best quality construction company, and it's priced exactly like that. So if you're looking from a value perspective, Group 5 has been undervalued for some time. It needs this infrastructure spend to come through, and it needs these earnings to grow. So we're beginning to see a turnaround, hopefully long may it last.
Let's move to the retail space, because we've been talking about the sell-off we've seen in retailers. It's happened once again today, and yet the market has moved to fresh highs on the day. Lewis, one of the smaller retailers, came through with their updates, a 6% increase in revenue for the 9 months to end of December. Good enough number coming through from them. Would you be buying the stock, holding the stock if you've got it? Yes,
we do hold the stock. We've held it for some time. I think Lewis is slightly different to other retailers. This is a credit retailer as opposed to a cash retailer like your ShopRites, Spars, etc. I think this trading update was below our expectations, and I think it would be fair to say it was below expectations as a whole. And I think this is now the effects of the strikes in the mining industry as well as the transport strikes. I think we've seen this coming through, and we've spoken about this before, having said that you can't have an economy where you've got the mining sector in the doldrums or priced for disaster, and you've got the retailer companies priced for perfection. At the end of the day, these strikes are going to hurt consumers, and it's going to hurt retailers.
Yeah.
And I think we're beginning to see this now.
You talk about the strikes, and news has just come out that Amplats has said they're keeping job losses, or they're not going to have any job losses. We talked about 14,000 job losses last week. They're not going to go ahead with those plans as it stands at this point in time. That's the update coming through from Anglo American Platinum. What's your response to that?
I think that's good news for the workers of Amplats and in the mining industry as a whole. Having said that, I think you've got to look at these are businesses at the end of the day, and if it's deemed to put some mines on care and maintenance, if they need to do that from a business perspective, I think that's the right thing to do. So, hopefully, I say hopefully, I'm sure they were probably forced into this decision. I don't know if it's a great outcome for the mines.
I mean, ultimately, you don't know how they reached this decision. There were threats last week coming through from government politicians that they could potentially lose their mining licenses. You don't know if that was something that was put on the table. Ultimately, you don't know why they had to come back and say, okay, we won't be shutting these mines or selling off those mines. This will result in absolutely no job losses. I mean, how does this piece of news change your investment thesis on platinum at all? Something, of course, we need to delve into and whether it will ultimately come through. But I mean, the company unprofitable as it stands right now.
Yeah, obviously we don't know what happens behind closed doors, how they came to this decision. Platinum, yes, platinum's looking quite interesting from a value perspective. I think there's too much uncertainty. Your earnings outlook isn't that visible at the moment. You need exceptional earnings to come through from these platinum mines. Right now, we're not sure if we're going to see that. So we're staying away from platinum at the moment, but I think it is beginning to look interesting.